Zacks rank buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks rank buys. We're going to take a look at some aggressive growth stocks with Bill Wilton, our aggressive growth stock analyst at Zacks.com. One in particular that you've brought with you today to talk about is Churchill Downs, the racetrack, CHDN, the ticker symbol. Had some flooding down in that region about a week ago.
Yeah, it's a bit, the weather's a little bit rough down there. We're seeing rain all over the country. But one of the interesting things about Churchill Downs is that their internet and slot machine business is booming, which has actually led them to their latest earnings surprise. So they're not just making money off the typical revenues like horse racing. They're obviously well known for the Kentucky Derby.
What do they do on the internet?
What they do is they have a system that allows them to take wagers online.
Oh, really?
And they've also got electronic slot machines that are booming. So the nice part is that they are seeing a bit of a downturn in their horse racing revenue, but a lot of that is getting made up for and then some by these online revenue streams and then the standalone slot machines.
But the interesting part is that even they have had to diversify.
Absolutely. The sport of kings is, the kings are a bit poorer now than they used to be.
Hanging on to their money more.
Yeah. Like I said, they've just beat the Zacks consensus estimate. They reported earnings per share of $2.20. The estimate was at about $2.09. So that was a nice surprise for them, like I said, driven by their online business. Earnings per share for the year, the new Zacks consensus estimate is at $1.91 for this year, and that's up from $1.55. So quite a jump there. Like I said before in previous videos, they're seeing a lot of earnings momentum, which is another form of growth. So even though we've got flat year-over-year growth, they're going to lose about 7% this year, gain 9% next year. But that earnings momentum is really what makes them an aggressive growth stock right now.
Okay.
Next, this is the Zacks premium screen. You can see that they've got a Zacks #1 rank currently. They're also pegged to outperform by our Zacks analysts that are following the industry. So things are going well there.
All right. Then there's Hanger Orthopedic Group, HGR, the ticker symbol, that you want to also let us know about. They develop, acquire, and operate orthotic and prosthetic patient care centers. That's a lot to say.
Yeah, it definitely is. But, these are artificial limbs and other, skeletal braces, things like that. They not only own centers where they fit and teach people how to use them and custom make them, but they are also the country's leading distributor in orthotic and prosthetic devices as well. They have also reported, an excellent quarter. Their sales were up 7% year over year. Net income is up 25%. So things are really booming for them. They reported earnings per share of 31 cents, beating the Zacks consensus by almost a nickel, 4 cents this time. And they're actually showing excellent year-over-year growth, 29% this year, and they're projected to grow another 14% in 2010. One of the other things I really like about them is that we're getting this growth at a reasonable price. The PEG ratio is just under 1 at about 0.92, and they're only trading at about 14 times the forward earnings. Here you can see a chart that I've put together. It shows the excellent upward momentum of the share price. I've also highlighted that long bar right there. That's on the date of their earnings report. They opened up much higher, but then fell right back into line with this short-term trend that we're seeing here. So hopefully that'll continue for a while.
All right. Do you own either of these two?
I do not.
Check out some other aggressive growth stock picks that Bill has written about recently on Zacks.com's homepage over in that upper right-hand corner where we keep all of the Zacks rank buy stock suggestions, and we change them every day. We put 4 new ones up there every day for you. Bill's category, again, aggressive growth. If you click on the headline right next to it, it takes you to the most recent story that he has written about his most recent aggressive growth pick. With Bill Wilton, I'm Terry Ruffalo.